If one morning you woke up and every major news channel in the world had the same headline, "The US dollar has crashed," what would you do? Would you run to withdraw cash that's suddenly worth less than toilet paper? Would you check your bank app every 5 seconds? Or would you pretend everything is fine while Googling how to survive financial collapse with shaking hands? Now, relax. Today, we're not predicting doom. We're explaining a global truth few people ever understand. Because the value of the US dollar is not just America's problem, it's the world's backbone. And if the backbone breaks, the entire global economy bends. And for most people, it's their wallets that snap first. But here's the twist. Understanding what happens if the dollar falls could actually help you protect yourself, your investments, your savings, and maybe even your future. So sit tight, because what you're about to learn might be the most important financial knowledge you ever hear. And don't worry, I'll keep the drama spicy, but the explanation simple enough that even your cousin who thinks Forex means for ex-girlfriend can understand. Let's start with reality. The US dollar isn't just a currency. It's the world's most powerful economic tool. More than 60% of all global foreign exchange reserves are held in dollars. Almost every major country uses the dollar to trade oil, gas, raw materials, manufactured goods, and even loans. If two nations who don't even like each other want to trade, chances are they still use the US dollar. It's like that one friend everyone low-key hates but still invites to every plan because without him, there's no transport. The dollar is the economic Uber of the world. So why does this matter? Because when the world uses one currency for trade, it creates stability, but it also creates deep dependence. Think about it. If your entire family relies on one guy to pay the rent, the bills, the food, and the Netflix subscription, your entire house is fine until he loses his job. The global economy works the same way. Countries depend on the dollar. Corporations depend on the dollar. Banks depend on the dollar. And if the dollar weakens, that dependence becomes fear, and fear becomes instability. And instability becomes crisis. And crisis becomes, well, let's just say history shows things get ugly. But wait, before we jump to the dollar collapse doomsday scenario, let's understand the mechanisms behind the dollar's power in easy words. The dollar is strong not because of magic, or because America is the richest country on earth, or because the paper is somehow better quality. It's strong because the world trusts it. The US government may have problems. Politicians may shout at each other 24/7, and the debt may be larger than Mount Everest made entirely of credit card bills. But globally, investors still consider the dollar safe. Why? Because the US has a stable legal system, strong military presence worldwide, and an economic history that, despite ups and downs, has never truly defaulted. But if that trust breaks, even a little, that's when the world gets shaky. Let's imagine the dollar starts falling. Not collapsing instantly like a movie scene where numbers flash red and everyone screams. No, it usually starts slow. Gradual weakening. Inflation rising, confidence dipping. Countries start hedging their reserves, meaning they begin using alternatives like the euro, yuan, gold, or even digital currencies. Slowly, demand for the dollar declines. When demand falls, the value falls. And when the value falls, everything pegged to the dollar begins losing its foundation. Here is where most people underestimate the domino effect. If the dollar falls, imported goods into the US get more expensive. And by more expensive, I don't mean your favorite chips go from $2 to $2.20. I mean real inflation. Fuel costs rise, transportation costs rise, food prices rise, manufacturing costs rise. And when the world's largest consumer market, America, suffers inflation, global exports shrink. But that's just the first domino. The second domino is global trade. Most countries buy oil in dollars. If the dollar weakens, oil-producing nations earn less in real value, so they either raise oil prices or shift to another currency. If they raise prices, global inflation increases. If they shift to another currency, demand for the dollar drops even further. Both outcomes weaken the world economy. The third domino is debt. More than $12 trillion of global debt is denominated in US dollars. If the dollar weakens, countries holding that debt face uncertainty. Their central banks panic. Interest rates shift. Currency exchanges fluctuate. Investors panic sell assets. And trust me, panic is the world's most contagious economic virus. The fourth domino is investment. The US stock market is the world's biggest investment hub. If the dollar falls, foreign investors lose confidence. They pull money out. Stocks fall. Bond yields change. American companies lose value. And since American companies dominate global markets, the impact spreads internationally like a financial tsunami. The fifth domino is psychological. And this one is arguably the most dangerous. When people lose trust in money, they stop spending. When spending stops, economies freeze. When economies freeze, businesses shut down. When businesses shut down, unemployment shoots up. And when unemployment shoots up, well, let's just say no country looks pretty during that phase. Now remember, the world is not stupid. Countries have been preparing for a possible dollar decline for years. Not because they want the US to fall, but because depending on a single currency is risky. China, Russia, India, Brazil, many nations have been building alternative currency systems, trading in local currencies, stockpiling gold, and developing digital payment networks. This is why you often hear the phrase de-dollarization. It doesn't mean the dollar will disappear. It means countries are slowly trying to reduce their dependence. But here's the fun twist. Even the countries that want to move away from the dollar are still heavily dependent on it. It's like saying, I want to stop using my phone while holding it in your hand watching YouTube. The world talks big, but the dollar is too deeply embedded to replace overnight. So, what would a real decline look like? Picture a slow leak, not an explosion. A decade of weakening buying power. International deals shifting away from the dollar. Reserve banks reducing dollar reserves little by little. More trade in alternative currencies. The dollar doesn't vanish, it just loses its crown. It becomes one important currency instead of the king of currencies. But what about you? What does this mean for normal people watching this from their couch or bed or while pretending to work in the office? Here's where things get valuable. Because if you understand the signs, you can protect yourself long before the world panics. Let's talk about the first impact on individuals: inflation. If the dollar loses value, goods become more expensive. But inflation is not the same everywhere. When it's mild, people complain. When it's extreme, people suffer. In countries where currency collapses, like Venezuela, Zimbabwe, or Weimar Germany, people had to carry money in wheelbarrows to buy bread. The US dollar would never collapse that dramatically, but high inflation? Absolutely possible. And that's why smart financial planning matters. The second impact, savings. If your savings are only in cash, your money becomes weaker as the dollar weakens. This is why understanding assets is crucial. I'm not giving financial advice here, but historically, during currency declines, assets like commodities, gold, real estate, and even certain types of stocks have held value better than pure cash. The third impact, interest rates. If the dollar weakens, the Federal Reserve might raise interest rates to stabilize it. High interest rates mean higher loan costs, higher mortgage payments, higher credit card interest, and tougher borrowing conditions. But there's an upside. Savers earn more on fixed deposits and bonds. High interest environments punish borrowers and reward savers. The fourth impact, jobs and wages. Big companies depend on global trade. A weak dollar disrupts that. Some jobs disappear, others shift. Historically, industries that suffer include retail, imports, and some tech sectors. Industries that benefit include domestic manufacturing and exports. The fifth impact, your investments. A weak dollar could increase the value of foreign assets and commodities, but it can hurt companies that depend on imports. This is why diversification is not just a fancy finance word, it's a survival strategy. But let's go deeper. because you're watching this to learn something people normally don't talk about. What does history teach us? Every empire that controlled global trade had a dominant currency: the Roman denarius, the British pound, the Dutch guilder, and eventually all of them lost power. Not overnight, but over decades. What replaced them? The next rising economic power. Today, many people assume China will replace the US. But replacing a global currency is harder than replacing a global smartphone brand. Currencies need trust, and trust is earned through transparency, stability, and legal systems, not just economic size. So would the dollar fall completely? Probably not. Could it decline? Yes. Has it already started? Some signs say yes. Nations trading outside the dollar, rising alternatives like digital currencies, and America's own growing debt are long-term pressure points. But the dollar collapsing tomorrow? Not happening. The systems are too intertwined. Now here's the important part. Even if the dollar declines, it doesn't mean your financial life must decline with it. There are patterns, there are strategies, and there are lessons from history that can actually make you stronger. The first lesson is diversify your assets. People who depend on a single currency suffer when that currency weakens. People who hold a mix of assets, stocks, bonds, gold, real estate, maybe even some exposure to global markets, tend to survive better. The second lesson, increase your financial IQ. When you understand money, you stop fearing headlines. Most panic happens because people don't know what's going on. The more you learn, the safer your financial decisions become. The third lesson, build multiple income streams. If your income depends on only one place, one employer, one client, or one system, you're vulnerable. But if you diversify your income the same way you diversify your investments, you create stability. The fourth lesson, understand that governments and central banks will always try to protect the system, but you should still be prepared. You don't need to panic. You need to understand. So if the US dollar weakens, the world will change. Prices will shift, systems will adapt, economies will move. But the people who understand money will always survive better than the people who ignore it. If you watch till here, you're already ahead of most of the world. Because most people don't learn financial history. They don't understand currencies. They don't think about the systems controlling their wealth. But you do. And that's why channels like this exist, to give you knowledge that protects you. Now here's the final thing. We don't know what the future brings, but we do know this. Money changes, systems evolve, empires rise and fall. But people who stay educated can ride every wave. If you found this valuable and you want more deep dives into the hidden truths of money, finance history, and global wealth, make sure you subscribe. Share this with someone who needs to understand how the world really works. And remember, learn the patterns, understand the system, and protect your wealth.